Okay, so if you're a trader and you keep getting stopped out, right, during choppy markets, I'm going to break down exactly how you can avoid that from happening, right? So this is a trade I took on the 25th of November, and it was an extremely choppy market during the AM session, but I'm going to teach you how you could have capitalized on this. So my full entire top-down analysis from A to Z, I hope to break it all down in this video. So the first thing to understand right away is key levels, right? So when I trade, right, if you are a struggling trader, it's because you're missing one of these three things, right? So you need to have a key level. That's the first thing you need. You need to have a key level to know exactly where to trade from. Then you need buyers and sellers inside of the key level. And then you need to understand absorption, right? Absorption is basically the order flow. So these are the three things that every trader needs. And if you're struggling, you're missing one of these three things. So in this video, I'm going to be breaking down how I use all these three to catch this long position from the 25th of November. So let's kind of take this all the way back, right? So how was I looking at the charts from a 4-hour perspective, right? Let's start on the 4-hour. So on the 4-hour chart, right, the way I look at this is we have our high, we have our low, and then we have our high like this, right? And now from here, this would be our local low, even though we technically haven't broken structure down here. We only wicked below, right? So the way I look at this is I would draw the fib tool from the swing high down to the swing low like this, right? This would be sort of my way of doing it. Now, once you've done that, the way that the reason for taking this long was simply for this reason. So we came into market open today, and as you can see here, if we look at structure, we were slightly below this 50%, right? So we were in a discount, right? A higher time frame discount, and I was anticipating a move towards premium. So that is one of the main reasons I looked for a long today, right? That was one of the main determining reasons. But if we go down now to a 15-minute chart where things get a little bit more real. Now on the 15-minute chart, I get a lot of questions about this. So I'm going to be breaking down this trade step by step, right? So I have a Discord where I go over pre-market plans and what I was looking for this particular day, right? So if we go to the pre-market plan, I was looking at this key level over here, right? So this was 67.16 down to about 6700. So why was this a key level on ES? And I want to make this clear for people because I get lots of questions about this, right? So for this level, we need to go all the way back to November the 7th, right? So on November the 7th, we had a key level over here. And the reason this was a key level is because we had an imbalance over here, right? 15-minute gap, 15-minute void, right? M15, just write IMB, right? Imbalance over here. So because of that, this then derived the key level. So the key level is the candle before the void. So that's basically this down to this, right? This was the whole level. So for the whole of November, what you'll notice is this key level between 67.16 and around 6700 was the main area of interest, the main key level, and there were lots of reasons for that. So if we drag price over to the right or drag this level, what we saw was another trade that I took 14th of November, price held as demand, right? What I mean by demand is buyers were in control. So this was the level where price held as demand. We come back into here, we still held as demand, right? Now, if we continue to drag this same level over to the right, what we saw is we saw the opposite happening, right? So if I just take away today's price over here, we saw the opposite happening. So what we saw the following week is price used this same level to hold as supply, right? It held as an area where price was holding as demand. So I'll write D over here. Then we flip to supply, right? Even here again, supply, right? Then we flip to demand. Then again, huge sell-off last week. We flipped back to supply. So what this means is, if you're new to this channel, I use order flow at every step of the way to determine whether this is a key level. So this was a key level all the way from the 7th of November, right? So if you go back and look at order flow during this time, you will see passive buyers over here, right? Passive buyers means it is an area of demand, right? It's a demand zone. It's where buyers are in control. So these are where limit orders are resting. So limit orders quickly. So we have passive buyers or limit orders, right? Limit orders or buy limit orders. For me to establish a key level in the market, there must be limit orders resting at that area. So between 67.15 and 6700, this is where there were limit orders. Again, you can go back and backtest this. Supply area, demand area, supply area. So this was a level I had all the way from the 7th of November. Right, so now on the 25th of November, 18 days later, this is still a key level for me. And so this was my pre-market plan going into the day ahead, right? So 1405, so that's 905 EST. I'm looking primarily at this level. So it's very simple when we have a level like this. So I'm just gonna fast forward this to market open. So if we go to market open on the 5 minute, now one thing that's important to note, this day, this particular market was super choppy. I was not a fan of this price action, but I want to break it down. Now, when we come into market open over here, so this was now 2:30 p.m. or 9:30 Eastern, how was I observing this entire price action over here, right? This was the New York AM session. So again, super choppy. I wasn't a fan of the price action at all, but I just want to, break it down. So when we have a key level like this, I'm looking for a break and retest in the bullish or bearish direction. Now, so when you have a move like this, I personally don't like to trade this kind of move, right? So when we have a break here, when we have a breakdown here, I'm not looking to necessarily go short like that, right? The reason why simply is because I'm looking for a break and a retest. So I want to see price break, come and give us a retest, and then go short, right? So to me, it wasn't clean, right? So what we had is we had this, right? So for me to enter short, I would need price to give us a rejection here, and then I'd look to go short somewhere here. But we didn't get that, right? This is what we ended up getting. So we had a bit of a confusing session for most people, but this is where it gets interesting. So I want to break things down. So on the 15-minute chart, what we can see is we see 2 wicks below our zone, right? So this is 2 specific wicks. Now this is interesting, right? So one thing that I've noticed just from years of experience trading order flow and key levels, when the market wicks below your zones, there's a reason for that, right? So we want to study what was going on inside of these wicks. So if we go to the 1 minute chart, we're going to be focusing specifically on a few different regions. So this is the first region. This is the second region, and just about here, wick below, this is the third region. So these are the 3 regions I want traders to really focus on, right? So this is about 950, and then 1004, and then 1023. So we want to focus on all 3 of these areas, right? So let's start with the first move to the downside, right? So what we can see here, heavy aggressive selling. So what does that mean by aggressive selling, right? So I'm just going to take this candle as an example. So this was the candle at 948. So what we can see, it's a red candle. Everyone can see that, just like the one before, just like the one after. So it's a red candle, and inside of the red candle, we can see a lot of negative delta, a lot of red delta. So what that means is that the left number, the aggressive sellers, are outweighing the aggressive buyers. So notice how these are aggressive sellers versus aggressive buyers. Now, the way we want to interpret that is by looking at the footprint charts and seeing, okay, there are more aggressive sellers, right? But the market couldn't really close below this zone. So on the 15-minute chart, we weren't able to get solid close, right? So that's just something to bear in mind. Now, the same thing happens over here. So this is now 1004, 1005, right? So actually, before we move on to that, this is a green candle, right? Over here, we have a green candle. Now, what's interesting is the bottom half of this green candle. So this is where the buyers and sellers sort of meet, right? So we have aggressive buyers, then we have aggressive sellers. Now, even though we have a green candle, the wick is heavy aggressive selling. Now, we can see that via the order flow footprint charts, via the delta. So I'm just going to break this down just so traders can understand this. So when we see here, for example, 325 for 71, 119 for 67, and then 17 for 0. So these 3 rows show negative delta. Now, negative delta just means there's more aggressive sellers than buyers. So at this price, 66.75, that's in this region, right? So what we see in this region is we see a lot of aggressive sellers and a sharp move up. So think about that from a hyperlogical perspective, even if you're new to order flow. What we see here is we see aggressive sellers plus no reward, right? No reward. Because if they were successful, we would have continued going down to probably the next level, which was somewhere down there. I can't even remember now. So that was the first indication of sellers beginning to fail, right? Aggressive sellers unable to sustain lower prices. Now, that wasn't the main confirmation for me. The second confirmation for me to go short or for me to go long, I wanted to see price come below this region, So when I was looking at this price action live, this was probably around 10:30 Eastern or 10:28. If we had had a rejection here and we would have come below here, I was happy to short this at this region, right? But we didn't get that. Now, vice versa, I was also looking very carefully at this line. So this is what I've started implementing into my trading. So I call it the accountability line or the break line. So basically what it means is when we have a break above a level, we have to come back into that level, see some kind of a retest, and then go long after price comes and shoots above that red line. This is important to understand. And vice versa, over here, if we break below the level, I would like to see some kind of a retest and go short only once we get below this line. Now, this long trade, I'm just gonna play it out, and I want traders to kind of understand what was going on. So 10:04, 10:05, we had a similar sort of situation. So this situation here again, this is now 10:03, 10:04, 10:05. Now, what was going on is we came below this level. So on the 15-minute chart, this would be a wick. So when we go to the lower time frames, we want to dissect what a wick below the level actually means. So what it means is this. What it actually means is we see a lot of aggressive sellers, just like we saw over here. Lots of aggressive sellers and a push to the upside. Now again, just like it was before. So we have a green candle. The top half is aggressive sellers. The top half is aggressive buyers, right? Blue delta. The bottom half is aggressive sellers. Now, when you look at this, you want to look at it and you want to say to yourself, who is being aggressive? Well, it's aggressive buyers and sellers, but who is being rewarded, right? That's the most important thing. Who is being rewarded, right? Where is the rejection towards? Well, the rejection is towards the upside, right? Even if you go back to a 15-minute chart, what we can see here from the 15-minute is, again, we see aggressive sellers, no reward. We see a wick. We see a second wick. So just dissecting this wick on the 1-minute chart, we can see, again, aggressive sellers, no reward, right? A ton of aggressive sellers. The market still manages to find some kind of support, right? Where we break above this level or we break into the zone. Now, the third rejection or the third kind of tap back below the zone was at 10:23. So at 10:23, what was going on? Let's break this down again. So 10:23, the same thing happens again if we notice, right? Wick below the zone, right? So we have I guess a doji candle, but the candle doesn't matter, right? We're looking at the key level and we're looking at the order flow in and just around the key level. So we can see the majority aggressive buyers, but over here we have very dark red, right? Very dark red. So that means there's more aggressive sellers. So again, we have selling. We can call it selling pressure, more aggressive sellers than buyers, aggressive buyers. So what's going on here? The same thing. 311 for 181, 243 for 105, and then 21 for 0. So if we just bring these two charts next to each other, let's see how they compare. So just going to make this a bit smaller for people to see. So if we just take a look at this, this is now the candle at 10:23, right? So 10:23, we have this rejection below the zone, and the price does eventually shoot up. So this is where I became interested in looking at the long, right? So we've broken above this line, right? This line was this. So this break happened at basically 10 a.m. or 9:59. We didn't get the break until 10:30, right? That's a 31-minute wait, and this is what you need to get used to, right? You need to get used to the idea of waiting for setups, right? So this price action was especially special. This was very special price action. Probably, I personally do not like days like this, right? You can still trade them, you just have to be patient. And one of the best ways to be patient is to wait for rules, right? Actually have a mechanical rule-based approach, right? My rule is very simple. I want to see a break above my zone, like this, for example. Then I want to see a retest. And I'm only looking to go long. That's a bit unclear. I'm only looking to go long after we get above the initial break, right? So this is the initial break that I'm talking about. So break, right? This here is what I'm looking for. Now, this gave me a lot of confidence to go long, right? The reason why it gave me the confidence to go wrong is not because of a breaker structure or a candlestick closure. It's actually not because of that. It's because of what was going on here, right? Between sort of 9:45 all the way to about 10:30, right? This entire region was packed with aggressive sellers, right? A ton of aggressive sellers, but there was no actual reward. So this is what we refer to as an absorption. Absorption of aggressive sellers, right? So we see that throughout the entire price action. So we see that here. So just to quickly go over this one more time, we see a lot of aggressive sellers. We see a reversal candle, right? I don't call it a reversal candle. We see a rejection of those sellers as we break to the upside. That's kind of, rejection one, if you want to call it. Then from here, we see the same thing. This is where it starts to get more promising. We see probably about, what is this? So 10:02, 10:03, 10:04, 10:05, right? We see 3 to 5 minutes of solid, heavy, aggressive selling. The market finds an area of support, right? So it shows you at this price action, this price, around 66.95. This here shows you again, aggressive sellers, no reward. Now we see the same thing over here, right? Throughout this level, we see aggressive sellers, even without reading the numbers, right? We see a lot of aggressive sellers. Now, yes, we see buyers too. Yes, we do see that. But what you want to focus on is if we cannot really close below this zone and we get our close above the zone, that goes to show you in this region, this is what happened. We saw aggressive sellers, right? And we saw no follow through. So aggressive sellers plus no follow through. Because remember, if sellers are aggressive, right? Sellers want to break price below the zone and break price below the zone. So seeing this goes against those aggressive sellers, right? So those aggressive sellers were unsuccessful. This is what we call absorption. It just took a bit longer to play out, but that's the market sometimes, right? You have to be patient. Sometimes it'll happen in one candle, sometimes it'll happen in an hour, right? We have no way of knowing that. We just have to wait, trust our levels, and execute based on what the order flow tells us. Now from here, let's kind of go through the break a little bit more. So this was essentially the break and retest. So for me, I was happy to go long at here. And just because of this volatility, I kept my stop loss just at the bottom of the zone, right? Because I didn't like this price action. Now, in terms of targets, just to go over that, basically, I exited at 2R, but there was a huge kind of imbalance over here, right? This was a very, very large fair value gap. So depending on how you trade, there's different ways to go about this. You can probably target this region just here. That would be a decent target, although I think I closed somewhere around here. I'll go through the execution as well. So I took this trade on... So this Thursday execution came, if I quickly break this down. So my execution was at 67.19. Let's just call that 67.20. If I break that down, stops just below 67.05, right? So 67.20, that was my execution. So 67.20, stops below the zone. And I think I targeted around a 1.5, right? 1.5R risk reward, right? So again, another thing, this trade was really difficult to actually hold, right? I didn't enjoy being in this trade, so I sat at basically break even from 10:36 all the way to I think 11:15. So that's about a 45-minute wait, just to see the thing finally push off in my direction, right? So it was a bit of a horrible trade to be in, bit of a horrible trade to wait for. If you wanted to stay cash during this and take no trades, that would have been fine. But what's interesting now from an order flow perspective, we want to go through a couple of regions, right? We want to go through this region, right? This is important for order flow. We want to see what was going on here. We want to see what was going on here, right? So these three regions separately were interesting. So let's break that down. So again, if we look at our first retest, this is our first retest here. This is where I entered. So my execution was around 67.20. If I break that down, yep, 67.20-ish. So what was going on here after we had the break? So we broke above the level here. We had this retest. Now, this retest, I only typically look for 1 or 2 candles for the retest, right? So again, at this price, so this is now 67.20, 67.16. Aggressive sellers, a lot of aggressive sellers. Look at this. Dissect the candle, break it down, right? Green candle, negative delta. Here is what I'm looking for. So I'm specifically looking for the order flow inside of my zone. That is all I'm interested in. I'm not reading all the numbers. I'm certainly not reading all the deltas. I'm not reading all the candles. I don't care what the candles look like. I just want to see how price reacts in and around my level. So in my level and just below my level, I can see multiple sellers, breaks to the upside. Multiple sellers breaks to the upside, right? Multiple sellers again break to the upside. So that was the first rejection. Let's go over the second. So second and third rejection. This is what kept me in the trade, right? This is what gave me the confidence to hold the trade, even though I didn't enjoy holding the trade. So second rejection here, this would have been basically 11 a.m. or 10:56 a.m. Again, what was very telling about this was we had a very large seller sitting over here, aggressive seller. Again, if we look inside the level, 161 for 38. And the market manages to find some support over here, right? So it's showing you that at this price, so 67.18, 16 to 67.20, it shows you in this region, there is a buyer sitting over there, right? There is a passive buyer who is absorbing the selling. And this is the thesis for the whole trade and any buy trade you take. This is the whole thesis, right? You're looking for a key level, an entry, and you're looking for an absorption of aggressive sellers to go long, because this means there's a passive buyer sitting over here. And the final rejection over here, this was just before the final rally, so this was 14 past 11. So a little bit late for me. I'm normally done by 11. This again, very interesting. Green candle, right? The bottom half was literally a ton of aggressive selling, right? So look at that. 121 for 2, 53 for 0. So what does that tell you? Aggressive selling, the bid, far exceeds the aggressive buyer, so the ask. So when you see that, you want to look at that and think, okay, if there's a ton of aggressive sellers, but the market cannot break below this area, right? Cannot really get back into this zone. Who is in control at this price, right? So this price here, 67.20, 67.16. Who is in control here? So what you saw is you saw aggressive sellers and then no follow through, right? So no follow through. And what we mean by no follow through is that there was no lower prices, right? Price didn't come back into this zone. We kept rejecting higher, higher, higher. So from an order flow standpoint, what we see is we see aggressive sellers and no follow through. So this is what we call an absorption of sellers. And so this means that buyers are in control, right? We see passive buyers, right? And this is the cycle I go through in every video. So looking at this now from an order flow perspective, so our entry, we had passive buyers over here, but we also had passive buyers over here. So well done if you were long on ES. It was a difficult trade to catch. It was an even more difficult trade to hold. One of the worst looking trades I've caught in a while, right? But of course we did go on to hit the target, 67.90, I believe it was, right? Yeah, there you go, 67.90. So again, if you like this trade, if you like this video, give it a like, give it a thumbs up.